University of Mumbai, Mcom Sem 4, Indirect Tax Question Bank Solution, question related to calculation of tax liability, part 3. Mr. Gaurish, a registered supplier of good of Maharashtra, pays GST under regular scheme and provided the following information for the month of May 2022. First, supply of good to Surat 18% 40 lakhs. Next given is supply of good at Satara at the rate of 18% 8 lakh. Purchase of good from Pune at the rate 18% 20 lakh. He has the following input tax credit at the beginning of May 2022. Both inward and outward supplies are exclusively compute the net GST payable. Let's see the solution of a problem sum. Calculation of net tax liability of Mr. Gavresh for the month of May 2022. First, we'll calculate the gross tax liability for the May 2022. So let's see the solution. So whatever GST collected on outward supply, first we will write that. So in particular, we have supply of good to Surat at the rate of 18%. Okay. So Gaurish belong to the state of Maharashtra and the supply of good is in Surat. Okay, so this is a case of a interstate. So entire GST will go into IGST. So 18% of 40 lakh, that is 7 lakh 22,000 will write in the IGST. Then next one, supply of good to Satara at the rate 18%. Satara is in Maharashtra. Mr. Gaurish is also in Maharashtra. So this is a case of intrastate. So this amount will be divided into CGST and IGST. So 8 lakh 9% will take because we have total 18% which has to be divided in CGST and IGST. So it will be 9% on 8 lakh, that is 72,000 in CGST and SGST 72,000. So when we add this, it is 18%. Now we'll just add the CGST, SGST and IGST amount. So this is a gross tax liability for the month of May 2022. Okay, so this is a transaction happening and we have done this. Next, we have a calculation of input tax credit available. Okay, so we now have to do the calculation of whatever purchase we have done or whatever service we have done. So in this problem, sir, we have only the purchase good of 18% GST from Pune, but Pune is also in Maharashtra and Gauresh is also in Maharashtra. So this is again the case of intrastate. So this 20 lakhs 18% we have to take. So 9% will go in CGST and 9% SGST. So 9% of 20 lakh is 1,80,000 and 1,80,000 in CGST and 1,80,000 in in SGST. So when you add up this total, so we'll get total input tax credit. Okay, that is 2,60,000, 3 lakhs and 1 lakh. So we first have to brought forward the ITC opening balance which are given in the sum. So in first we'll write brought forward ITC, that is input tax credit, that is actually the opening balance of input tax credit, that is 80 lakh in CGST, 1,20,000 is HGST and 1 lakh IGST. So when you add up this, you will get the total input credit balance in CGST 2,60,000, in HGST 3 lakhs and in IGST 1 lakh. Next, we are going to calculate now the net tax liability. So in column number A, the calculation, that is tax payable which we have take out. So in CGST we have 72,000, in SGST we have 72,000 and in IGST we have 7,20,000. Less we will have the opening balance of electronic credit ledger which is given in the problem sum, that is 80,000, 1,20,000 in SGST and 1 lakh in IGST. Less total input tax credit, but you are not going to take an exact total which is there in the input tax credit, but you will deduct that 80,000 from that total, so you will get 1,20,000. Then this also 1,22 is the opening balance which is add up in the input total credit. So you have to deduct that and you have to minus and then write this amount as 1,80,000. Okay, in IGST we don't have total input credit balance. So now you have to just 72,000 is your tax liability, minus you will do the opening balance of electronic ledger credit ledger, and then you have a total input tax credit which you are going to deduct from the 72,000. So we have the excess credit available in CGST, that is 1,88,000. Again we have in SGST excess credit. Once you minus this 1,20,000 and 1,80,000 from 72,000, you will get the excess credit available, that is 2,28,000. Then in IGST we don't have access, but here we have to pay our tax liability. So 7,22,000 which is tax payable, and opening credit balance we have only 1 lakh. So 6,20,000 is the amount which we have to pay as our GST. Okay, so this is the amount payable, and whatever there in the in bracket, that is the excess we have, means we have a credit in our balance. Okay, now we'll do the adjustment of excess credit available in IGST and CGST. Okay, so we have a adjustment of excess credit available in IGST and CGST and SGST. So in particular we have CGST, then we have SGST and IGST. So net tax availability, excess credit available, we will write here, that is 1,80,000 in CGST, 2,28,000 in SGST, and 6,20,000 is not an excess, but it is the amount which we need to pay. So this IGST which we need to pay, will adjust it with the CGST and IGST. So first we'll take CGST credit adjustment, again IGST. So this 1,88,000 we'll put it in a IGST. Okay, then we have excess in state also. So as SGST 2,28,000 also, this credit will be adjusted in the IGST because we have to pay this liability. So after deducting this two and making the adjustment, even though we have a liability, that is liability after set off is 2,04,000. So this is a pending GST amount which we need to pay. So this is a liability. And credit, we don't have any access now because we have adjusted it into IGST. So this is the way we calculate our net tax liability. First we find out the gross tax payable, that is whatever outward transaction we have, then we take that, and whatever purchase that we calculate in our input credit in our second column. Then we do the calculation of net availability. Okay, where we first take the tax payable amount in all as in CGST, SGST and IGST. Then we less opening credit balance, whatever we have, we write that. Then total input tax credit, deducting that opening balance, we'll write. Then we'll have the net tax liability, or we have the excess credit available. So in IGST, CGST, we have access or we have liability, so this can be adjusted. So we'll have a next column that is called as adjustment of excess credit availability. So whatever liability we have, we will adjust it whatever excess credit we are having in our account. So this is the solution of our problem sum. Very easy, just you have to understand the concept. Once you understand it, it's very easy. Okay, so in the next part we'll solve the next problem sum. Please prefer subscribing and click on notification bell icon for the next part. Thank you.